William, just taking a look at that US jobs numbers, I mean, a very, very big miss. Was it all down to trade tensions with China?
Well, there are a couple of things going on here. I mean, to begin with, I suppose this data isn't disastrous. It is less than expected. We had over 200,000 jobs created in April, so it's quite a slowdown. But there were wage gains, and there's still some buoyancy in terms of consumer demand in the US market. So this is certainly not a case of things coming off a cliff. But it does point to a lot more caution from businesses. And of course, trade tensions do feed into that. Important also to contextualize this, though, in the context of where we are in the business cycle in the US as well. We've had the longest continuous period of expansion in the US economy in history. And certainly we've been expecting a recession to come at some point in the next few years. And this softening of hiring does feed into this picture of the economy slowing down overall as well.
But it looks like the jobs numbers did give the dollar quite a bit of impetus in afternoon trade. What's the thinking around buying dollars at this stage?
Well, of course, the dollar is always the global reserve currency. So when there is some worries in the wider economy, it is certainly a source of some safety for investors as well. So in this environment of people being worried, of certainly a lot of skittishness in currency markets around the world, that would feed into strengthening the dollar.
All right, and talking about worry, how worried are you about the growth forecast coming from the IMF this week that global growth would be slower than expected? I suppose, I mean, not too surprising because there has been so many warning signs and many people have been saying this. But for you, I mean, an announcement out of the World Bank and even the IMF, is this keeping you awake at night even just a little?
It does, as a South African, living in London and, watching what's been going on in the South African economy. Certainly, there's no room for any external shocks. The South African economy is very fragile as it is. So certainly, a more dramatic slowdown in the wider global economy would be bad for South Africa. So that certainly keeps me worried. In terms of the overall direction of travel for the global economy, and this is something we've really been expecting. The announcements, the forecasts that the World Bank put out in January were a lot more optimistic for 2019. And since then, a lot has happened in the past 6 months. So the ratcheting up of trade tensions between the US and China, among several other risks, have certainly contributed to the slowdown. So it's not unexpected, but it is worrying.
Yeah, and William, as a South African, what are some of your colleagues in the investment community saying there, having read the headlines about the possibility to, broaden the mandate of the Reserve Bank, the possibility of introducing quantitative easing here in South Africa? What are they saying?
I think there's quite a lot of confusion among a lot of businesses who might have exposure to South Africa but aren't necessarily that focused on South Africa about there seems to be mixed messages coming out. And from the perspective of international business, Mr. Ramaphosa is supposed to be a reformer and things are supposed to get better after he was re-inaugurated as president. And then you start to get these messages coming out of the authorities with rather worrying signals around changing the mandate of the Reserve Bank, among other concerning policies. So this sort of confusion and uncertainty certainly creates a lot of lack of confidence from investors. I was at an event with other analysts last week, and we're sort of unpacking some of those cabinet decisions. And again, it sort of speaks to a rather mixed bag and certainly not a clear signal when it comes to what the Ramaphosa administration is trying to say to the international business community.
I mean, just looking at the Rand's performance this week alone, being the laggard in the emerging market space, I'm wondering if we've fallen all that we can for now, or if we're still very vulnerable to the political noise coming from Luthuli House here in South Africa.
Again, it's important to put this in the wider perspective. So, of course, when you have some controversial political statements like we've had over the past few days around the central bank, and of course, revisiting land reform and various things like that as well. That creates some short-term volatility, and the rand has certainly weakened quite dramatically in the past day or two. But we don't expect very dramatic depreciation over the course of the whole year on average. Of course, with that weaker data coming out of the US, it makes it, of course, very unlikely that we're going to see monetary policy tightening in the US, and that would be in the rand's favor. We wouldn't, and that sort of supports stability from the South African currency perspective. So overall, the depreciation should be relatively moderate over the course of 2019 on average.
Right, and I suppose it all also depends on what the final outcome is regarding the relationship between the US and China. This announcement coming out of Facebook following Google in, cutting ties with Huawei, not sounding like a positive one.
No, it does sort of speak to a pattern that we're seeing where we're essentially seeing the global technology space beginning to be split into two large camps. So we see the large US tech giants obviously separating themselves from Huawei, and the US putting a lot of pressure on its Western allies to not allow Huawei into building its 5G networks or supporting government systems and so on. Whereas on the other hand, of course, Mr. Xi of China has been in Russia, and Russia and China have been getting together, and Huawei is going to be building the 5G network there for Russia's largest mobile operator. So we do see this process of starting to split into two big global camps when it comes to technology. Not to say we bifurcated down the middle when it comes to the internet, but we're in this interesting pattern where certainly US firms are having to separate themselves from this provider.